okay?
Yeah, I just thought, I
Yeah.
just realised.
No, it's a good question. I think you'll be okay. I just thought I'd be
Good morning.
Morena.
Is Abby coming too?
Abby's online. I've just
right.
messaged her to say
Okay.
we're just
Okay, cool.
we're just going in.
She's in the waiting room.
So I understand you're doing a 10-minute presentation. Is that correct?
Is she ready? Does she know we're starting early?
I've just messaged her to say that we've just come in,
Okay.
so she should be.
Do you want to give her a minute or?
Yep.
Yeah.
Yep, if we can.
Sorry, we forgot about the people in the.
Hey.
We forgot about the people online. Do you want to start without or all?
Yeah, I can, in the interest of time. So
Yeah,
do you want
let's
to
just go.
keep things moving? So on behalf of the CCHL board and management team, I'm happy to present our annual report for the fiscal year 23. We have got a presentation to talk to, but I want to make some high-level observations before we start that, if you don't mind. This report represents another step in the transition of CCHL's operating model as we move to becoming a more active manager of our portfolio, and it's what we refer to as an integrated portfolio management approach. That is in part responding to requirements that you have of us, which date back to some of the outcomes of the Northington report last year, but also as we've worked through what the future looks like, there is a clear and more compelling need for CCHL to be more active in making capital investment and capital allocation decisions than has been the case in the past as well. So this year's report is a bit different from previous years. So previous years CCHL has tended to focus on what's happened at an individual subsidiary level. And this year we've prepared the report through the lens of what we are doing at CCHL and how we are thinking about the use of capitals beyond just the pure financial capitals, and looking to add value to the portfolio. So hopefully that comes through in the flavour and tone of the report. It was certainly the intention. It's also part of our commitment to becoming more transparent and strengthening our reporting and communication around the key activities that we have underway at CCHL. When we prepared last year's report, we presented a conceptual framework in terms of how we were thinking about our capitals. We've done further work on that this year, and this year's annual report reflects that, and simplifying the four capitals across financial capital, across intellectual, human capital, social capital, and natural capitals. So that will form the basis for how we continue to report going forward, and looking at the total impact and the total shareholder return we deliver to you as the ultimate shareholder. We also believe that this is an important step in strengthening and improving our own reporting of disclosures, with climate-related disclosures being an important focus for this next financial year. So on that, I'm not sure who's driving the presentation, but we can get into that. I see Abby has joined. I'm not sure if I think she's in the airport, so we'll probably stay as a listener rather than. You're obviously familiar with the investments in the portfolio, and hopefully have become even more familiar with them as we work through the significant number of workshops we've had attached to the strategic review over the last few months. In terms of a group overview, there's a fair amount of information on this slide, but the things that I would draw your attention to is that whilst group NPAT is down on last year, that's really a function of limited growth in the value of investment properties. That's not unexpected when you're in a high interest rate environment. What is more pleasing is the improvement in underlying operating performance, and that's been a function of the continued recovery at the airport, so the strength of the tourism and travel recovery, the acquisition and integration of Spencer Henshaw by CityCare, enable continuing to deliver a stable performance in terms of adding new connections, and at this point managing the increased competitive threats that they face, and Orion and LPC navigating what have been mild headwinds that have impacted their respective operating performances, in part due to regulatory frameworks, and just in part due to the changing nature of economic activity as well. So that's a pleasing result in terms of underlying performance. You'll see on that slide that the SOI projections contemplate that continuing to improve. You've had some visibility on our expectations around that through the strategic review workshops, but there is also an offset, and the offset is, of course, we are still carrying a significant amount of debt as a consequence of the special dividends that were paid to council a few years ago, and like all parties carrying debt, that is subject to higher interest servicing costs at the moment, which ultimately impacts what we can pass through to you as dividends. But also, the whole point, I guess, of monetary policy tightening cycles is it creates the incentive to repay debt, and we are as motivated as anybody to get into that business as well. So that's obviously something that gets factored into the CCHL board decisions. The other thing that I want to point out is that there's been a significant increase in the value of the assets in the portfolio as well. So when you see a 0.6 number, it doesn't seem much, but that's $600 million. That's a significant uplift in the value of the portfolio. And that's been a consequence of revaluations for Enable and Orion, plus normal CapEx undertaken by the subsidiaries, and the acquisition of Spencer Henshaw into the group as well. What that boils down to at a parent level is that we committed to pay a dividend of $32.4 million, which has been paid. We've committed to a dividend for the next financial year as well, which we are in discussions with council management over the timing of that, and we'll continue to work through that. Beyond that, ultimately what happens will be a function of the outcomes of the strategic review. So I think we're all fully aware of that piece. In terms of the big numbers, again, your share of those total assets has increased significantly through the course of the past financial year. So it's $4.5 billion that you, as a council, the ratepayers of Christchurch, have invested in these assets in terms of total investment, and $3.8 billion of that is in equity. So it is a significant portfolio by any measure in a New Zealand and Australasian context. Next slide. As I talked about, we're in the process of transitioning to integrated reporting. We've done a fair amount of work this year on refining how we think about the capitals, and whilst it's difficult to read up there, the simplification into thinking about it across financial, intellectual, social and natural capitals now informs how we approach our work at CCHL. So this is a total impact approach that we are now taking. We've used external experts to help guide us on that. So the conceptual framework that we had last year was largely a function of management workshops. So we've now tested that against what best practice looks like, and making sure that we are integrating into our own program what is best practice from an ESG perspective. We've also established an impact subcommittee in CCHL as well, and that reflects the importance that thinking about the impact across the non-financial capitals has as part of our decision-making framework. Where we go with this, so there are still programs of work that we have underway, particularly in terms of completing materiality assessments. But ultimately, the further kind of big rocks that we might move will be a function of what CCHL's future operating model is coming out of the strategic review. In this chart, we've just highlighted some of the the key initiatives that we've had underway. So in terms of that intellectual capital, this is about ensuring that that CCHL, the group, is a safe, diverse, inclusive, equitable employer. We've had a look at all of the group policies that fit into this space, and working with the subs to make sure that there is a consistent approach to group policies. CCHL is committed where it can to taking a leadership role in the development of these policies. So we want to set the standard, but it's also fair to say that these subsidiaries are committed to being good employers. So there's a lot of work underway already within the individual subs in this space. In terms of social capital, so we continue to invest in our He Huanui program, again, giving directors, management, staff across the group access to programs that will support their own journey in terms of embracing te reo and strengthen our iwi engagement program as part of that. You have a requirement of us to ensure that we are paying a living wage where that applies across the group. It's obviously been a challenging year, as you well know. To retain that commitment, there's been some active conversations with the impacted subsidiaries on that space, but we remain committed to that and are continuing to adopt that policy. The existing Te Whariki platform continues to expand. It's a tremendous initiative in terms of unlocking opportunities for collaboration and engagement right across the group. Council have now joined the platform, so the universe of participants in that is continuing to grow, and it's an important platform that has strong visibility for us across the group. We're also committed to strengthening our stakeholder engagement processes. So CCHL has not had a stakeholder engagement plan in the past, so we have committed to developing that, and that piece of work is well underway. It's led by the work that we are doing on the strategic review, but will be expanded beyond that, again, once we get clarity on what the future operating model for CCHL looks like. In terms of our sustainability journey, the Impact Subcommittee has determined that meeting our obligations as a climate reporting entity is the priority for this financial year, and so that is what we are focused on in terms of making sure that the group commitments are aligned, that we're getting the right information at the right time and can report in the right way. So it's a significant body of work that we are committing significant resources to for this current financial year. So all of these points here obviously represent progression on where we were at last year in respect of those same issues. Just going to talk really briefly on the strategic review. You're well aware of where we're at with that work program. We are continuing to respond to the request and requirements of us that were informed by the council resolutions of last year. I guess at a high level comment, we had two options in terms of the way we'd approach this work. One was we could have gone away and done the work and then come back and told you what the answer looks like, which to us would not have been a great process. So instead we committed to an interactive and iterative process, which you've been hopefully the beneficiaries of, given the number of workshops that we've had, and we fully understand that ultimately we will be responding to your requirements, and your requirements will only benefit us if they are well informed. So hopefully you are experiencing that in respect of the strategic review work program. So looking forward, we continue that transition to a more active approach. So it has become obvious, I think, to all of us that CCHL needs to become, at a minimum, a more active owner of the assets in the portfolio. That is reshaping the way we will interact with our subsidiaries. We'll be doing more work with our own board in respect of what that more active or integrated portfolio management approach means, and the levers that we would have available to implement that. We're obviously working to conclude the strategic review in a timeframe that allows you to do the work you need to do as part of the LTP process and subsequent public consultation process, and out of that outcome will become any refinements we need to make to our own business model going forward. And then lastly, the next step in terms of the integrated reporting framework will be to include a climate statement and, as I said, meeting our obligations as a climate reporting entity moving forward. So that's a high-level summary, and happy to open up to questions or observations.
Great, thank you, Paul. Did you want to add anything, Abby, or? No. Okay, great. Yeah, questions. So Kelly, Yanni, Aaron. Sorry.
Thanks for that, Paul. Really interesting. Just interested in the increase in value of the whole portfolio at 11%. Is that uncommon in the history of CCHL?
I don't think you've had $600 million increments on an annual basis, no. So it really reflects two main things. So it was the valuation methodology applied to Enable and Orion. Sorry, I might be stealing Tony's thunder here. But and if I bring it back to kind of fundamental principles, with Enable, there was a greater degree of confidence in terms of the long-term financial forecasts. So that saw a discounted cash flow methodology approach adopted this year. So and that was also benchmarked against what is greater visibility in terms of market transactions as well. So there have been transactions in the space which help support a degree of confidence around how the market would value these assets. So both of those two things underpinned the uplift in value for Enable, and likewise with Orion. There is market transactions. The Eastland Group transaction provided a benchmark against which Orion's valuation could be measured, and that has also resulted in an uplift in valuation for Orion.
Also, just with the Spencer Henshaw acquisition, I mean, you know, in your time with CCHL, have we made many acquisitions, or is this a bit of
in my time, in the past year? That's it. Yes. Yeah. So look, that acquisition was consistent with CityCare's strategy. I think there's been lessons for everybody in terms of the way that the transaction evolved, and it's certainly informing our approach to how we will engage with the subsidiaries going forward. But if you think about CityCare and in that property maintenance services business is narrowing its focus to social infrastructure as the sector it wants to play in, this was completely consistent with that agreed strategy. It needed a leg up in terms of funding we've provided to help execute the transaction. Yeah. But so far, it's performing above expectations. So
good. I mean, it's a really positive thing. Just given our current financial situation, and how likely is it that we would be able to continue to grow by making other acquisitions in future?
I think that we've been pretty clear as we've worked through the strategic review that capacity is constrained. It's not necessarily constrained at an individual subsidiary level, but it is constrained at a parent company level, and that is a function of the debt that we are carrying on our portfolio. So that puts constraints on our capacity to borrow more, and we've got a very limited headroom from that point of view. We can obviously have a conversation with you as the shareholder about creating more headroom, but that also requires us to have the ability to service that debt, which again comes back to dividend and comes to ourselves. So from an individual subsidiary point of view, in terms of supporting growth, what we have learnt as we've worked through the investment reviews is that they are all focusing on growth. So the good news for these assets, I think, is coming out of 10 years where they've had to deal with a GFC and an earthquake and a pandemic. There's a lot of reasons to be looking over your shoulder when you're dealing in that kind of environment, and they all now feel like they've got some clear air. And we've presented, obviously, what their ambitions and expectations are as part of the strategic review work program. So there's definitely opportunity. How we execute is up for grabs.
Great. Well, wonderful to see you growing. Thanks.
Councillor Hanson.
Yeah, thank you, and thank you for the really good reporting that we're getting. Really appreciate the work that's gone into it. I did have a question on page 110 of our agenda. It's basically you're talking about building a fair and more inclusive place to work.
Yeah.
And I guess I was just struck by the lack of the diversity within the group and also on the board. boards, you've got 36% of the companies in terms of board diversity have female directors, and across the group you've only got 21% of the workforce. But recognising that gender is just one form of diversity, and I was really interested, and this won't be an unfamiliar question, is what monitoring are you doing around other indicators of diversity around the board tables and within the group companies, and when are we likely to be able to get information in that regard?
I'm happy to talk about it from a group governance perspective, and Kelly might have some observations around what it means at an operational level. But part of the change in council policy in regard to governance appointments means that we are refreshing the boards more often, and certainly our work program in appointing new directors this year has been far more substantial than it has in previous years. And that has given us an opportunity to absolutely push harder on diversity in terms of what we are looking for in respect of outcomes in terms of appointing new directors. I would note that I think I read some press this week which told us that actually trying to take a more diverse approach is disgusting, and we should only focus on people that live in Christchurch and Canterbury. So we are pushing hard. It is a competitive marketplace. It is really hard to find or to move the dial, not just on gender diversity, but more on ethnic representation. There is a limited pool of people out there that meet our requirements for complex operating businesses, and they are in high demand.
Riley, I mean, would we be able to get the trend as well? Because I think, though the annual report's good for showing us just what's happened over the year, seeing the trend is probably
we would agree with you on that. It applies to a number of indicators.
Yeah, and I guess one of the big concerns that I've got is what's been happening in terms of health and safety and in terms of the port.
Yeah.
And there's sort of no real recognition of that I can find in here. Are you able to tell us what's being done in regards to CCHL taking a more proactive role in health and safety across our groups to make sure that we are addressing the significant issues that we're seeing, like, for example, at the port?
Okay, yep, so sure. So specific to the port, obviously there were a number of reviews. I think there was 5 in total as a consequence of the events of last year, and particularly the tragic death of Don Grant. And we have had LPC come and report to us directly on this matter. I think we brought LPC to you as well, I seem to recall, in a separate session, to report back on what changes are underway. And it's not just about strengthening the health and safety regime, it's also about making sure that people don't get reform fatigue. So reviews happen and then people kind of go, good, that's done and we can move on, so that the culture and behaviours at the port are changing. It is an incredibly strong point of focus for them. That's what I can tell you. It's an incredibly strong point of focus for us in terms of engaging with them. In terms of what CCHL has done to be more proactive, we have lowered the threshold for reporting. So it used to be that only incidents that were notifiable to WorkSafe got notified to CCHL. So we now require reporting on all critical risk incidents, and we require reporting on leading and lagging indicators. So the lagging indicators is the incident reporting. The leading indicators is what are you doing to strengthen the system and change the culture.
Do you think it would be useful, given that sort of over the past decade and slightly longer, there have been significant health and safety concerns with the port, and I know from my time on CCHL, it was a serious issue that people wanted to be looked at back then. Do you think it's worth getting some sort of independent review into how things have been able to get worse rather than improve? I mean, I'm just mindful that it's taken a huge amount of attention at a governance level, and I guess for those of us who were there at the time, you know, like quite a few years ago, where it was a key focus, it's quite alarming to see that what's happened.
Look, I think in terms of another independent review, as I said, there were 5 reviews last year. So I think probably a more useful option would be to ask LPC and particularly this new board to reflect on the outcomes of all of those reviews.
I was more meaning CCHL. Like, what has CCHL done over time around the health and safety monitoring?
Yeah.
And what lessons could we learn from it to make sure that we're improving in terms of.
Yeah, we can take that on board in terms of a review of our risk management approach.
Thank you. And just a final question from me is, and I appreciate we got a table sent round. I'm not sure if it's public or public excluded around the remuneration, senior remuneration, but it was quite good. It had the trends.
Yep.
But obviously there's a few things in there that are quite concerning. And I know in your report, there is a section where we talk about showing restraint, measuring the gap between the lowest and the highest paid at the companies.
Yeah.
But what you can see from the trend is some pretty significant blips. And I just wonder if CCHL is looking at some sort of policy around how that's occurring, because when you look at the graph, it's quite alarming, really.
Yeah, look, so I acknowledge that in your enduring statement of expectations, there is a requirement for us to ensure that across the group we are demonstrating restraint in executive pay. There is no definition of what restraint actually means. So the preferred indicator is the gap between top 10 and bottom 10%. So that's reporting. I actually think that demonstrating restraint moves beyond just that. It's a difficult measure because you can do what we have done across the group this year, which is close the gap in relative terms. So in terms of percentage pay increases for those at the lower end, they have received on balance higher increases than those in the senior management ranks. So that's the sort of thing that you would want to see. But when you're in a high wage growth environment, in absolute terms, the numbers can get wider before the gap begins to close. So it's quite difficult in that environment to draw a clear trend. So then it comes back to culture and behaviour. And I think one of the mechanisms that we've landed on in terms of strengthening this concept of pay restraint, I'd prefer to talk about improving pay equity across the group, as being transparent about what chief executives get paid on the day they start work, rather than leaving it to be buried in an annual report that someone has to go find at some point in the future. So we have adopted that for the first time with the recent appointment of the LPC chief executive, and we will continue to do so going forward.
Just in terms of context, Gianni, with that chart, those spikes that you can see in some of the subsidiaries, that is because we've had someone leave during the year. So that remuneration includes everything, so termination benefits or bonuses, etc. So
that's what concerns me is given the significant scale of that termination remuneration, it's quite alarming. And I'm just wondering if you need to look at what's been going on. If you've had three...
I think we can move on from this at the moment. I think we've discussed it enough.
Yeah, there's obviously limited comment we can make on those issues because they are subject to agreements.
Yeah. Councillor Keogh.
Yeah, just two questions, hopefully they're quite quick. One is around dividend and interest rate. So the amount of debt you carry, is there a point, well there must be a point if the interest rates, and hopefully they don't go any higher, but if interest rates keep climbing, and they weren't meant to get as high as they are, so anything can happen, what point do they get to that there is no dividend? Does that number exist?
Well, yes, it does. I think if rates went another 2% higher from where they are right now, then that would become problematic. What we have done is we've just recently done some work to change our assumptions. So our assumptions had previously been that we would see a peak in interest rates around this level at around this point in the cycle. Financial markets then tend to run straight to, well, when's the first rate cut coming? So we've basically said we're not going to rush to that judgment. We're just going to assume that the rates stay at these elevated levels for a longer period of time. So we're doing some work in terms of what the financial impact of that will be if this level of rates is sustained for more than 2 or 3 years.
Right.
So that would start to prove a bit more of a drag.
Yeah, because the concern must be we have an orange light on the Middle East at the moment, and that can change very quickly.
Yeah, I think as a broad principle, not just interest rates, we are assuming we are heading into a period of more sustained macroeconomic volatility. Simple as that. So we need to be conscious of how our subsidiaries adapt to that across a number of fronts. It's not just about how we manage our interest rate exposure.
Going into our LTP, we should be mindful of that as well.
Yeah.
and we are.
And then the other question was, it was, I think, slide number 6, the one of, I'm logged out. The one where we, other key impact work. So a number of those things there have been kind of driven a bit from this table.
Yep.
So certain requests in that.
Yep.
Do we have a number on the cost of that? So when versus if council, because I know one of the things is council could take all its assets and turn them into a portfolio that pays us a dividend that would an investment portfolio that we wouldn't actually get to touch, and that would give us a certain amount of money. But the way we currently do it, we can have an influence. We're having an influence here.
Yeah.
What's the cost of this influence?
So we have a group consultant budget that's approved as
I
part
think
of
the
our
public should know.
our annual budget. In terms of those specific measures, we can report back to you in terms of what the individual breakdowns are.
Yeah, and it might not be a very big number, and therefore you look and you go, you know what, the wins outweigh the cost.
Yeah.
But it could be completely the opposite and be quite a big number, and you kind of go, are those all worth it?
Yeah, so I guess there's a couple of things here. One is obviously CCHL is a pretty lean organisation. I mean, you can see us here. I can't find a leaner organisation that manages any amount of money, let alone a significant amount of money. By extension, that means that we do require the ability to recruit external resource to help get through specific tasks that pop up in our work program, and most of those tasks are required by you. But also part of that will be about how we interpret our own role as becoming a more active owner and manager of these assets and manager of the portfolio. What I would prefer to do, so we can come back to you on cost, but cost is only one component. So what we intend to do is develop an impact assessment framework, and so that will have the costs and the benefits of this particular work. That's going to be far more insightful information. I would think.
No, that'd be really good. Thank you.
Councillor Fields.
Kia ora. Just picking up on what Councillor Hanson was asking around group diversity, and just specifically about the port. Now, I know that, I don't know to what level, but the port is very heavily, in terms of workforce, is very heavily skewed towards one sort of gender. And I don't know to what level it's going to affect that. But what specifically can the group do to sort of to help the port develop a more diverse workforce in that space? And particularly in regards, there were some comments around the makeup and type of worker in the Transport Accident Investigation Commission report. So I'm just sort of thinking about what your specific thoughts were in that regard.
Yeah. Look, I'm always reluctant to tell our operating businesses how to run their businesses. We employ skilled people for a reason, much better than me at running a port, I suspect. It is in their own interest to encourage greater diversity across their workforce. I think in terms of one of those issues that you're raising, one of the things that is moving in the health and safety space is the concept of fit for work. And when you're in an environment where you are doing a lot of, let's call it heavy lifting, but manual labour, which requires a level of performance that requires a certain amount of fitness, then a lot of effort is going into ensuring that we've got a workforce that is fit for work. And that will, I think, provide for greater differentiation across roles and tasks, and that in itself will open up the opportunity to promote greater diversity. But again, ultimately, those are operational decisions for the subsidiaries to make.
Great, thanks. So do we have a mover? Yep, Tim, seconder. Kelly. All right, any debate? No. Oh, Yanni.
Thank you. I just want to acknowledge that the work that CCHL does on behalf of us as a city. I'm incredibly proud of the fact that we own our public assets and we own these companies and the work that they do for the good of the city. I do think there's a few things that we do need to continue to follow up, and hopefully we can maybe get a separate briefing around the Transport Accident Commission's investigation into LPC. I think it would be really good for us to understand, in terms of the council, CCHL and the port, what lessons we could learn from what's happened. Also, I do really want to acknowledge the increased transparency around CEO remuneration, where, as we've been told, we will announce it when the appointments are made rather than having to wait. But I still think we do need to do a lot more work around the diversity of the boards and of the workforce, and also around that pay equity issue from the bottom to the top. So, and I appreciate that they've acknowledged that more work is needed in that space. So I just wanted to acknowledge the things that have happened, and just to recognise that that we do have a holding company that is working hard for the good of the city, and I appreciate that.
Great, thank you. All those in favour say aye. Aye. Against, carried.
Thank you.